He's just waiting for the market to open. Thanks, Kashkari's infinite liquidity. What's up, everyone? How you guys doing? Gaffin here trying to shill more Cardano. Hey, Jen. What's up, Greg? For some people, this is Sunday service. Fair. All right, so I don't know. Let me find out something real fast. Okay. Got that. Okay, cool. I'm gonna spam hearts at you all stream. Of course you are. Why wouldn't you do something like that? Welcome to the weekly cult meeting, everyone. Hi, friend. I had to take a break from trading for a while, but it's been nice to come back and say hello. Hope all has been well. Weren't you here like last week? Everything's fine. How have you been, Flo Kala? Whoa, blue section. If we go a blue above blue, does that mean the rapture? This was the extended price action range following CPI. So this was added to the chart when CPI came in. Boo. Thanks, Gaff. Good morning, Pickle Man. What's up, Willie? Where is Bob Vance? Vance Refrigeration 4.8 stars on Yelp. He was in here earlier this week. I don't know if he's in here today. I just show up because better than grocery shopping in silence. That's true. Also, you never know, you might be able to sell more Cardano. If not, you get pick up that CNIS commission. Yeah, no problem, dude. Happy Sunday. I promised I'd never steal your surfboard. I don't. Okay. I don't own a surfboard. I don't think. In honor of old OPEX questions, how are we looking for SLD this week? I mean, I'm kind of looking to SLD to see if we see equity sell-offs, right, and any like significant margin deposit volatility, um, that might kind of peg a top here, and we might actually start to see some leverage to the downside. I think what we did see this week more than anything was that nobody was buying this shit for more money, right? The Bulls pumped and they pumped again, and they pumped some more, and it all kind of just petered out into the end of the week. I mean, they had call ladders going all the way up to like 4,600 back here on like Monday, Tuesday. Oh, that's thick. Hold on. And then those progressively broke down throughout the week. Back here like 45.75 started to break down, 4,600. And then we started to see like 45.50 start to break down. And then Friday we saw 45.25 break down really, really fucking hard. And some at 4,500, which is the at the money strike, right? And even though we basically closed right there, all of the upside positioning over the course of the week dropped off. So either we're gonna see that build back up again, and we're gonna get more pumps, or we're going to continue to see it fall off and get kind of a correction. We have some pretty massive downside gaps that very easily could fill. Give me 1 second. Let me go out to the 1 hour so you can see those a little bit better. And turn off that. Okay. So we've kind of, I mean, we've kind of created another island, very similar to the price action back here, if not even more erratic and gappy, right? And this kind of tells us that they're pumping, but no one's coming in to buy. So Monday, I don't think it'd be out of the question to open on a gap down. Even if we don't, we may see one over the course of next week, right? As they continue to fail to find buyers in this range. So right now, I would say maybe we move between like 44.75, 4,500. There is still support there. The 44.75 strike is still strong. So it's very possible that this will be kind of our low. And then we may bounce up back into that 4,500 test. Gamma Max has contracted a bit with the long positioning that came in here, which was largely at 44.50 and 44.25. So that pulled Gamma Max down, but we didn't see like Gamma Neutral or Delta Neutral come up very much over the course of this week. So not a lot of new short positioning come in. They rose, but minimally. Hopefully now, actually, I could look. Give me 1 second. I think I have the data for Friday. Yep. So a little bit of charm falling off, but still most of the positioning for next Friday. Dealer Delta is just flat. Dealer Gamma's contracting a little bit. We do see Gamma Neutral move up, but only like $3. Delta Neutral moved up about $10. So, oh, this didn't even move up $3. This just moved up like $1. Yeah, so still not a lot of short positioning yet. But no one's buying. So, if we're not going up, then people are going to be incentivized to sell off even more in the money calls, because no additional profitability is being gained, right? And that's kind of why we look at that like the like variance and forward returns on call positions, because we know it gives us an idea of when profitability on call side positions begins to decline, right? And that that decline causes or incentivizes selling. I told you I'd buy your bags off you for 10% over, then it pumped 15% the next day. Exactly. That's my point, Gaff. I'm doing all right. Taking things. Oh, nice, dude. Yeah, no problem. In honor of old OPEX questions, La Jolla Cove. What? Am I missing something here? Okay. Anyway, what does it mean that the dollar dropped hard? What will be the impact? I assume people are going to pile into the yen. There'll be interest in the yen and other foreign currencies. The impact of the dollar dropping has been oil going up, right? Because lower dollar, higher import oil costs, and then yields driving down very very hard. This creates a good opportunity for foreign investors to buy U.S. Treasuries. As everyone is well aware, the Fed is going to continue raising rates, right? So if you're converting US dollars into your own currency, there's a huge advantage to buying treasuries now while the dollar is low, and then later on when the dollar goes back up, converting into your currency, right? And so um also, that kind of drives the dollar lower, and then that in turn drives oil up, and you get kind of a reflexive action between the three asset classes. But it does seem to have kind of stalled out as of Friday. We'll see if it continues next week or it doesn't. Um, Obviously, that'll become more disincentivized as we get closer to the Fed raising rates. It could potentially push a surprise out of the Fed. If it were to get extreme enough, I don't think we're there yet. But say the dollar were to go under like 95, spot on oil were to rise to like 85, that could force because oil's already additive currently, or it just crested over additive on Friday. Let me take a look at something here. So WTI fell off. Brent, that should be good enough. Yeah, Brent just fell under additive. But if this is gonna continue up over the next couple weeks into the Fed meeting, above $80, oil starts to become additive to inflation, right? Which means that all of the work they've done to bring inflation down is gone over like a rolling 3-month period. Because most of our contraction in headline inflation has been oil, like 30% by weight. Yeah, I think IWM is probably done with its pump. Obviously, like Russell fell off pretty hard on Friday. After it broke up and we saw that like midweek price action on Fubo and Carvana and all of those. But yeah, it does appear to be falling off somewhat. It can still recover here and bounce higher, so keep an eye on it. I think Fubo specifically ended the week like right at $3, so there's still some chance that it moves back up again. Right? Oh no, it did fall below. That's not very good. We'll see if liquidity starts to contract. If we continue to see covering here, though, it's possible that it still tests like 350. I would say it's still a little early to tell, but I tentatively sold some covered calls already. With the flooding that's going on and will continue to go on in the California Central Valley, are you looking at getting into long-term commodities position for the food price increases? Maybe. Not yet. Those are kind of more specific than anything I generally trade. I mean, what, like almonds? I mean, I'm probably not super interested in participating in any of those markets. They're kind of very speculative and high volatility. Interwebs tell me the dollar will be fine because RC is a quarter away from announcing GME's answer to Amazon profitability, which will single-handedly save the economy. Oh, Jesus. You and I both know that's bullshit. Turning in late, catching up. Can you talk about how high physical gold and silver can go in the event of a correction or a crash? Quite high? Silver probably won't have as much of a as high of a correlation as gold will. Banks will still buy gold if the dollar were to drop substantially, or they need some sort of inflation protected asset. But um, they'll also probably just get like tips. Uh, Gold, I always be careful of buying the top on gold, or silver rather. Gold, a new high I think is possible. And that's currently what I've been buying options for like the last couple months. Um, there's probably a decent case for BTC also moving up. I have no interest in buying it, but there's definitely a case there because interest will be split on the retail side between BTC as a uh, flight to safety or gold, right? Boomers are largely going to move into gold, and they still have a lot more money, but BTC will see some tailwinds from that as well. Is Zama buy if it holds 100? Um, could be. I need to look into their most recent acquisition and why it was seen as so bearish. Um, but I'd probably go like I bought some options on it like Friday, 105, 110 for September. I had some options on it before and then got stopped out of those and then bought back in. 100's been pretty strong. Not that it can't slip lower. It obviously could, but we're crab traders now. There's no pimento. Well, pimento would require large amounts of leverage positioning on one expiration. If you want a pimento, I guess next Friday. But I'm not sure that the current call positioning on the chain is going to last till next Friday, given how much of it's fallen off already. What's the longest VIX can be pinned for? Well, until something happens. Are we really headed for 9? I don't think so. Are you trying to do technical analysis on the VIX? 9 would be below historic volatility. That's the odds of that are extremely low. I saw a tweet asking when GME would pass Amazon market cap this morning and threw up a little in my mouth. There ain't much growing where those floods are. Most of those fields have been dry for some time due to poor water management. Didn't California's like reservoirs all get a nice boost last year? No interest in BTC, same as no interest in making money. That's not true. I can just buy MSTR, right, Gaff? I don't need to own BTC. Just stop by to say hi. Can't stay. Went down. How down? Am I down? Maybe. Peace out, Girl Scout. Always good to see you, Popcorn Trader. Is it time for the Gresham and Thiers lesson yet? No. What kind of price action do you anticipate for Nvidia and Upstart this week? Upstart started to fail a little bit Friday, and didn't hit the call interest at 50. Significant amount of charm that was there likely collapsed as weeklies sold on falling price action. Uh, Upstart's tricky. If it starts to tick up again next week, people are gonna pile into weeklies again until bulls get exhausted. Which they haven't market wide. And then also, you have to factor in the bots pumps and the illiquidity there. If it sees consistent downside, it'll probably start to fall faster and faster. People will start to leverage the downside. More vol shorts will move in, but give it some time. I don't think it's pulled back enough. If it starts to pull back under 40, it'll start to get pretty bearish again. Otherwise, I'd be really careful with it, or only like sell bear spreads and moderately far out of the money. Yes, but they send all the water down to Southern California. Well, they need it. Also, they have the money. Is it true RC's making his own rocket ship to compete with Bezos and Musk? I don't believe so. When GME below 2250? My calls are curious. Wait, what was the other one? NVIDIA? Oh, okay. Sorry, I forgot the second half of the question. Yeah. So Nvidia kind of peaked around 480, and then we saw a bunch of covered calls start to come back in again on it. That crushed out the weekly calls that were building all that upside momentum into the end of the day. As you see, right here where all the weekly calls came in, when those finally capitulated, yeah, it fell off really hard. This is kind of the story with Nvidia's upside every time, is we start to see a lot of sold calls pull back, and then a bunch of weeklies come in. Charm gets super blown out, and then it rips, and then everyone just sells cover calls again, and it drops back off. It ripped a lot higher this time, but that was probably about the only big difference. Same thing. If you're selling bear spreads on this, make sure you close them on the dip in the early part of the week, because it starts to get more volatile as you approach Friday when calls are actually affordable. Did JFresh's question about where the money is coming from that's causing the recent pump ever get resolved? I mean, some of it out of reserves, some of it out of on RRP. Both of those are really kind of too low. Some from FHLB. There's been a lot of lending in that facility. The discount window has been pretty moderate. I would say that liquidity is drying up. I wouldn't say that more liquidity is coming in. I mean, these pumps aren't nearly as strong as they were 2 months ago or even a month ago, right? Like in June, we just ran fucking headfirst right into Gamma Max. This time, we've already kind of confirmed a peak, and if we fall below 4,500, we have. Is Upstart a good short play in your opinion? I think there's probably better ones. It's really way too illiquid. It's a good short vol play, but it's not like a good I'm gonna buy a bunch of puts on it play. There was a period there where I was buying protective puts for my covered calls. I still have those, but they're worthless. If I guess if we fall back below 35 before August, but that hasn't happened yet. I would say it's not the same as cat, but it has a lot of those same risks on shorting the downside. It doesn't take a lot of volume for it to pump right back up again. So yeah, I probably wouldn't go long short it unless maybe it was just like intraday or something. Or synthetic, where you can hold it for a really long period of time. How do multiple call debit spreads laddered $5 lower than the previous reduce risk lock in profit? Or is that not what you were doing on Wednesday when you had 3 of them? That's not what I was doing. I was just playing a reversal, which I can't remember Wednesday if that came to fruition or not. I think it did. If you have like a, so say you have like a 45-10, 45-20, and the price goes up to 45-25, then you can open a put spread here and lock in the $10 profit. So if this were to then fall, your profitability would be the same, right? There's some slippage due to doing that, but you can do that in order to avoid actually closing the position. Although closing the position is probably far better. However, you will lose your membership to the Toe Ring Gang, so it's up to you. Did Dork and Carl ever have a hot girl summer weekend? Didn't somebody visit Carl's stomping grounds? That was, I think, J Fresh. J Fresh was, well, I don't know if he was visiting Carl, but definitely Carl's wife. With Dixie dead, is Cat 270 an inevitability? It's been looking better, but I don't know how much more Dow's going to gain here. Friday, you had some earnings stuff, and that helped. Microsoft is kind of petering out. Yeah, most of the last week on Cat was it finally squeezing out those 250 covered calls. But it didn't move a lot higher after that, right? Yeah, all of the big tech stocks currently have been seeing similar price action. It's ironic, right? Because the bulls are the ones selling the covered calls, right? So it's not like they're kind of squeezing out the longs over and over again. But that's been going on Meta, Netflix, Tesla, Nvidia. The price will stabilize, and everyone who's long the stock knows that they're kind of overvalued, right? Unless they're incapable of reading balance sheet. So you kind of end up in a situation where once the price stabilizes, everybody starts selling covered calls. That starts to bleed the price down a little bit. But then the price goes down a little bit, and call buyers come in, which then pressures the covered calls again, and then they pull back. And then when the covered calls pull back, you get a big surge of price improvement, which is then kind of killed by more covered call sellers coming in. If you want to build a synthetic long position on Express, I don't think you want to do that with a reverse split coming up. That seems like a terrible, terrible idea. When you have sufficient capital to avoid PDT, will you disband the Toe Ring Boys? Not entirely, but goals will shift. Balance sheet the same as tweets with 10 emojis. No, not nearly as powerful. Okay. All right. Well, we got Dork here for a minute. Is now a dumb time to buy a house? I don't think it's a great time to buy a house. I do think housing will come down. I think we've yet to even realize the effects of, you know, CMBS issues. And yeah, I think it's taking a little longer, but there's some markets where housing prices have dropped moderately. I think it really depends where you live. Some markets are obviously more stable, but we have seen some pricing come down. Unfortunately, interest rates are still going up. So no, buying a house right now is a terrible idea. I mean, you're still buying at a relative high in the housing price market, and then additionally, you're paying double the price of the home to finance, if not more. And there's no guarantee you can refinance to a lower rate in the future, right? Can physical gold stabilize above 2000? Um, Unlikely. I would say that it can go above 2000. It could even stay above 2000 for some time. Um, which, might be considered stabilization, but I think over time that would bleed back sub 2000. Not only yeah, the growing supply and recyclability are a big factor, but also the move to like more digital stores of assets um means that it's going to lose progressively and over probably a very long period of time. It's going to lose its value as well, a store of value. You have a timeline target for when entering the housing market might be a good idea. I mean, first you want the Fed to cut rates. I don't know, look for supply and demand to start shifting. Demand's still shockingly high. So unemployment is really what you're looking at there. 6 months of higher unemployment, I would say, will start to significantly increase supply, provided there's no larger failures in the CMBS or MBS market. Any expectations for earnings season? I mean, it's kind of the same as last earnings season. Can they do it? Like, can they beat their forward guidance? Or are they gonna miss? And misses are catastrophic at this point. Success is largely priced in for the next 10 years. So approach them with that knowledge. I mean, there's probably decent plays on all of the big tech earnings. And I hate playing earnings, but there are ways to play them where you can make money. Thanks, and I found a bunch of coins in a field, and I cash them in so I can buy out Revlon. Nice. I like it. It's better than keeping them in your bunker. All right. Let's see what Dork's up to. Dork. Dork, you're live here. Pickle Financial. How you doing, man?
Yo, can you hear me okay?
Yeah, I can hear you fine.
Right on. How you doing?
Hanging in there.
Yeah, same. Just did 2 days of audio for this bike race in Downeyville. That was fun.
Yeah, I mean, I really wish you'd schedule your work trips during market hours, but, you know,
I tried, man. I left with 30 minutes to spare in the day. I was hoping it would cause a market crash.
it caused a $5 candle wick on the closing bell.
Up or down?
Up. Dude, so I went I went from positive 3,000 to negative 1,700 in one wick.
Jesus. God, this market is so ridiculous.
Fucking terror ring gang though. It's not like I could have closed him.
Well, soon enough. You just gotta get out of the freaking PDT zone, and then you'll be set, right?
Yeah. Well, then at least I can sell like 400 butterflies when I fuck up.
That's true. Yeah, yeah. You just freaking just lay it on there.
Yeah.
That's what everyone else is doing at that point. That's all they're doing is
Oh,
saying
yeah,
that.
absolutely. If I could have, like, it would only let me sell like 5 bear spreads, which was okay. But yeah, if I could have sold like 10 or 12 butterflies, the whole position would have been neutralized, and then I would have gotten I don't know, like $300 credit on top of it.
It's so crazy how just money can just essentially give you a little get out of jail free card so long as you don't fuck up colossally.
Yeah, yeah. As long as you don't let your spreads get too out of control, you get a free pass a lot of the times, especially with zero DTEs, because I mean they're so fucking on like the 4,500 calls and puts were hitting like 350 into close at the money.
Wow,
Yeah. So
that's
you
so
can,
crazy.
you just sell the butterfly like 4,500, and then you do the two long legs at like 44.95 and 45.05.
Okay, wow.
Yeah, which were trading at like 20 cents.
Oh right, yeah, yeah. I guess it makes sense. Whew. Man, it sounds like an interesting day though. At the end, I mean, it was pretty boring when I left. I was like, I don't think I'm going to be missing much here, but
Oh yeah,
some,
we dropped hard. We dropped pretty hard, and a bunch of the like out of the money like bullish positioning started to collapse. We saw in the money calls start to sell off. But we did stabilize at like 4,500.
okay. Yeah, JFresh was. I had enough. I had like some Wi-Fi where I was, so I was able to check out like some of JFresh's Delta charts, those ones that evolve over time.
Yeah.
Those were interesting. He was saying that bears are dead, but when we think about options from a portfolio management standpoint, I was like, this is actually pretty bearish what you're seeing. Is so long as it does fit the sort of standard portfolio management thing where you have people who are maybe going underweight and then covering their long exposure with calls, right, to sort of keep their positioning sort of the same. That's kind of what I was thinking.
Well, I mean, to me, it kind of looks like they're so selling so many calls, they're pushing the dealers short.
That could be.
I mean, that's kind of the effect we're seeing on like the commitment of traders, right? Is we saw some of those like big short positions capitulate back in like the June pump, like back here. And we saw some of that like leveraged fund interest in the short side close out, but now dealers are like significantly like 20% more net short than they were back then. And
Okay,
then
yeah.
the leverage funds are still like now the second largest short position to ever exist on futures, so nothing's really changed. And Dork's actually turned up as much as I can. He's in his car right now, so the audio is going to be a little.
Yeah, I'm sorry, guys. I can scream, but I don't want to. Yeah, okay. So that makes sense then. Yeah, so it would make sense that it would be short calls, and perhaps Jay Fresh's, what he's using is not necessarily uh, fully accounting for bought versus sold.
Well, yeah. I mean, because assumptions have to be made.
Exactly. Yeah. Okay. Yeah. No, I was kind of wondering about that. I didn't know what he was doing with it, but I was just assuming that he was 100% accurate because I'm a sucker for Jay Fresh and his data. But yeah, that's pretty interesting. A bunch of short calls. I mean, makes you wonder if whoever's pumping this market's going to try to blow them up as well, right?
I mean, ideally, but they tried, right? Here was the interesting thing. In the early part of this week, and a lot after the CPI report. Like when CPI came out, we failed to break 4,500, right? And a large part of the reason that we failed to break up through 4,500 was that we had all those sold calls at 4,500 and 4,505. And so when we finally did break above 4,500 the next day, the expectation was those would get squeezed out, and some of them did. But then they just kept selling more at 4,505 and 4,500, like in the money. Um, they started selling at 45.25. They started selling at 45.50. They started selling at 45.75, right? And yeah, I don't think. I mean, this is the bulls doing this, right? This is the bulls selling these short calls. Um, I don't think they're getting squeezed out this time. They seem to be way more confident than they were before. You know, when they were selling at like 1, 2 sigma, and then getting squeezed out by the pump over like a few days. These are like these short calls are right at the money. There's no fear about lost value, right?
Okay.
So
Yeah, that
I
makes
mean, I would say that there is. I mean, they already know on the last pump that there's not a lot of buyers in this range, right? And this range is actually even higher. So it's not astounding to me that we're getting less time to the upside here than we got on the previous pump back at the beginning of July.
yeah, yeah. I remember like yeah, the market gapped up super hard and then it just kind of floated there and then it did it again a few times and it's just the overnight gap ups they're not really like yeah they're not bringing people in people I don't think people are just very excited about buying the market at these prices with 5% interest rates. It just I don't know how you could be, right? I think that everybody who's in right now and is profitable on the long side, I think they're all looking for an out, and short calls is one of the best outs you got, right?
Yeah,
So that's cool though that conviction is growing to the flat side at the very least, right?
yeah.
I don't think there's a good bit of confidence to the downside, but it's hard to tell if that's short puts or long puts, right?
It's a bit mixed. We're starting to see volatility. So that is something I noticed. I started to see some volatility pick up Thursday, Friday at like the 4,500 put strike and the 4,575 put strike. Which is obviously the complete opposite of what we've seen up until now, right? Where those strikes are getting sold short on the puts.
Oh
Um
yeah, everybody's puts died. Yeah, that's just they were just killing the puts.
yeah. So it's there's a little bit of confidence. I'm really looking to SLD this week. I think if market participants are going to shed core securities, and remember for everybody here in chat, those core holdings for all these hedge funds are Mag 7 basically. They have other stuff, but primarily most hedge funds are sitting on a shitload of SPY, a shitload of QQQ, Apple, Nvidia, Microsoft, Meta, right? So if we start to see sell-offs in any of the Mag 7 or the indexes for SLD, that shift to getting margin is really bearish moving into the following week. So, and I think also kind of spells an end to this trend of kind of not needing any margin because everything's being sold 0 DTE or bought 0 DTE. Um, and a couple weeks ago in Pickles Picks, I went over in the DD about like how these margin requirements from like FINRA haven't really caught up with this intraday 0 DTE selling, and part of stemming that was back when they did the haircut. Um, and we've really never seen the pumps recover from that point forward. But I would expect in the future more more actions will be taken to trim down their ability to leverage these positions intraday without taking on any kind of implied risk.
Yeah, I think FINRA definitely notices what's happening, and I think they're probably concerned because as this pump sort of grows, and just the mechanics behind how it's being pumped, right? Like what's happening is you're over concentrating the market into these market makers, and your ultra short term tail risk is just crazy high. So any sort of intraday thing that spooks investors could like just send everything into a tailspin and run a very real risk to the participants that have to be the counterparties to these positions.
Well, I mean, think about it this way: like a 2% intraday increase in or a two point intraday increase in VIX means that all of those zero DTE positions need to be hedged immediately, right? Or liquidity, like margin liquidity deposits, need to be made in order to continue carrying them. So intraday, like a bomb falls in Poland or whatever the fuck event it might be, Biden collapses on stage. There's a million little things that could happen that could just spook people for a few minutes. Or like that one day where we got the, remember that like AI like false report about the bombing at the Pentagon?
Yeah, I
But
remember
that
that.
happened
Yeah,
like
I mean,
right at market open, so the zero DTE risk was still really minimal because volume hadn't picked up yet. But if something like that happens in the mid to later part of the day when zero DTE interest is like in the hundreds of thousands of contracts, that immediately creates like a probably not even a tiny SLD event. It creates like a big one, right? And so now all of a sudden everyone needs to start selling securities to make those margin deposits intraday, right? Because implied risk has gone up, and delta risk has skyrocketed, and so and then that's going to cause people to start leveraging with zero DTs to the downside, and yeah, like you said, it can it really turns into a big stack of dominoes.
yeah, it's a play. Yeah, exactly. In the later part of the day too, like as gamma is sort of like pinching inward on the at the money strikes too, like that short term tail risk, it grows and grows and grows, and yeah, and I mean. We've seen, some things happen that kind of scare people a little bit, and the market will drop like 60, 70 basis points, but then it bounces right back. But if there's something that's scary enough, like to cause a consistent amount of selling, like to keep pushing down, right? Not just like the initial knee jerk, but like as it's being digested, it's actually bearish, like that kind of a thing. It really could just completely blow up the entire sort of the whole freaking parade of clownery that's happening. Like it'll and it'll be one of those things where we would probably see a violent upside move like we've seen. All hail the V. But if that V is not successful, right? That's like the big save the market move. And if that doesn't work, right, then all of the
You cut out there for a second, but
sudden,
all hell breaks loose, I assume.
you know,
Yeah.
you're looking at yeah, like you said, just like it just goes traveling through. The technical term is bumfuck nowhere.
You cut out for almost all of that, but I think everyone got the gist.
Yeah, it's mostly just talking about gamma pinching in on at the money, and then that causing major risk in the later part of the day.
Yeah, the market makers are so willing to provide liquidity. Like, I mean, I know JFresh is doing it, and I've not been taking on as much risk with like the end of the day spreads as him. But I mean, you can sell credit spreads 3, 4, 5, 600 contracts blocks at a time at end of day, and they fill like at the fucking mid the whole block.
That's crazy, man.
Yeah, like there's no fucking
It's so crazy
slippage
that the market makers
whatsoever.
are yeah, market makers, it seems like they don't care. Like I
Well,
think they're having a
they have to
party
hedge the
too.
gamma, right? So
Yeah, it makes
you've just
sense.
got shitloads of gamma on either side,
Yeah, so they're
and
willing to go
so
long those contracts.
yeah,
Yeah, I mean, it's crazy how liquid it is, right? And like, and that's one of those things. I think we're getting used to the idea of like 5-cent spreads, on pretty much every SPX 0DT contract out there.
yeah,
But like if something crazy happens, those spreads are gonna blow up, and market like like you're all those like multi-thousand bid ask stacks at the at spot are just they're gonna evaporate, right? You're gonna be looking at maybe 100 bid ask, right?
yeah.
So it's
I mean,
interesting,
that
and
happened like end of day Friday. This It bounced up to the higher, strike, and the spread just collapsed, right?
yeah, okay, yeah, it's so sensitive, right? It's just everything's existing on a hair trigger, right? It looks great. It looks great. Just like intraday volatility has really diminished a lot, since the introduction of the zero DTE. But like that comes with a trade off, right? It's not. There's no such thing as a free lunch, and in this case, the cost is a short term tail risk, going through the roof, and putting us in a like Volmageddon, you know, there was no zero DTs for Volmageddon, and so like Vega exposure really expanded, on the further end of the contracts for that. But what we're looking at now isn't even necessarily like Volmageddon as we saw back in 2018. It's more like I think it's more dangerous ultra short term, but the bounce back is going to be equally as violent.
Yeah, it seems like a recipe for like a flash crash.
Absolutely. Well, yeah, flash crash, and
And then if you get a continuation, it becomes an actual crash.
yeah. Well, if the zero DTE game just ends, then yeah, it's all over. There's no real. The only way you could bounce back from like an actual sort of evaporation of market making on the zero DTEs is for people to go long as fuck, further dated calls, because and like at the money in the money. Because the only way you could really kind of stanch that, or heavy buying on the indexes, like on the underlying, right?
Yeah.
It's the only way, and I don't think anybody's necessarily feeling so happy. Like I said it earlier, no one's feeling necessarily stoked about buying, S&P at 4,500. Some of the equal weighted S&P is still pretty low, so you could see a dispersion trade there if there is a flash crash. But
I think we've
I don't.
seen that already happen when we've dropped, right? Like when we had the big gap down from the last spike, we saw some dispersion trading going on with like RSP, right? And like we saw RSP move up on the drop like 90 BPS while SPX was failing.
Yeah, yeah. There's been a little bit of the dispersion trade in that sense.
So there is some there, but not enough. I mean, not enough to save it, right? Because like if you have a 200 BPS event right now, that's gonna put a couple billion gamma out of the money, right? And worse yet, the short delta is gonna go out of the money at like 44.75, 44.50, like where they've sold all of these puts, and then vol is gonna spike, right? And then the Vega exposure on those contracts just skyrockets.
Yeah, and that's
um
the Volmageddon type. That's the most close thing we have to the Volmageddon is the Vega exposure on the sold puts, right?
yeah.
So yeah, it's like if Volmageddon had like if Volmageddon was a stick of dynamite, this is like just a barrel full of nitroglycerin, right? It's just so much more volatile, and it takes so much less of an impulse to really cause the explosion, right? It's just
Yeah.
ready to go. So
Yeah,
it's
the
interesting time.
the tail risk during Volmageddon wasn't this pronounced, interestingly. This would be way worse. But
Yeah, the market was healthier back when Volmageddon happened. Ironically enough.
and most of that just had to do with like greed and over leveraging of, short vol leveraged funds, right? And like ETNs. But this is just directly on the index.
The interesting thing too is how much short exposure there is to treasuries right now. Uh, there's an insane amount of short interest on, like, I think it's like the 2 and the 10-year T notes have just massive short interest.
Yeah.
So in the event of something like this, if people, if there's a crash and it's like a flash crash or something, and it does scare investors, they're going to rush into these T bills and put a ton of pressure on these short positions. And that right there, like, those short positions on the T notes, if our running, sort of rolling DD is correct, are going to, like, what's going to happen there in that event is, counterparty risk on the swaps is going to just explode, and then we have a very real contagion risk to the financial system.
Yeah.
That's the part that kind of scares me about this event this time around. Like Volmageddon, there was a bit of treasury, clownery going on, but this time around, it's a way different environment. We got these interest rates that are so high that brought there so quick, and everybody's just hedging the crap out of their gigantic pile of bags that they had to buy because of the stimmies and the increase in deposits, and so it's just we're just on like in a way more dangerous overall financial environment, in terms of what'll happen in the event of a flash crash. So,
With the
I
majority of someone's got a question here. With the majority of trading being in the dark, CNS can a flash and dark pools in CNS, can a flash crash even happen? Yeah, absolutely. Those systems are not going to prevent a crash. Not at all. If anything, they can accelerate the speed at which one happens.
Yeah, CNS CNS is really only a super relevant metric, at the bottom, right? When there's a ton of fails on ETFs, that's kind of where CNS becomes a thing again. But like in the event of like an actual like crash, you know, everyone's gonna want to settle as fast as they possibly can, right? They
Let
don't
me
want
let
to
me
they don't
just
want to
let me just
fail.
defend Gaff real quick here. CNS is always a thing, Dork. It's
I
continuous.
I understand that, Gork, but I'm talking about when it becomes relevant. Okay.
I know.
Yeah, nobody, in the event of a crash, nobody wants to fail their trades, right? You don't want to end up, failing on something and then have to, close it out at a super disadvantageous price, right?
Or
It's
in
not
an
in the best
environment with no
interest.
liquidity.
Exactly. Like, and you could tell, like, I mean, like what we've had, like in terms of these dips and stuff. October was sketchy, but like every time the market bottoms, you check the FTD data later on when it comes out, and you see that there's a whole bunch of fails on ETF. And what that is, I think, is some entity somewhere feeling confident that we're near the bottom and just starting to fail to sort of slow any sort of continued downside move. But in the event of a flash crash, you'll see fails, spike, but you'll see them stay high for quite some time, right? If the market really does get super illiquid versus just like, millions of fails on SPY for a single day or 2 days, right? You'll see it for like a solid week or, even longer if it's really, really bad.
Yeah, until they can net everything off. It'll take
Exactly.
time.
Yeah.
That's what CNS needs more than anything is time. It's very effective, but it does need time. And it's
Exactly.
only when it becomes overloaded within a specific time horizon that it really has any kind of market impact. CNN
Yeah.
just
Yeah.
reported the CNN just reported that the U.S. will now allow European allies to train Ukraine with F-16 jets. Okay. I recommend First Class Catastrophe again for a good book about the 1987 crash. Okay. I don't know if I've read that. Thanks for the answer. No problem, Middle Western consumer sentiment rep.
That's his name.
Yeah.
That's
Um,
good.
so yeah, I mean, I feel like going forward in the market, we're still in the same position. As long as this glut of zero DTE selling and then CTAs trying to leverage against that continues, um, we're going to continue to carry this big fat bag of tail risk around. And then, an adverse event can have significant implications. Right now, everybody in the market's kind of betting that something sporadic or random won't happen. They're really pinning their hopes on, no tail event is going to occur. And I think up until the 21st, if they can survive that long into July 21st, those short put positions will begin to stabilize a little bit in the lower ranges. So the short put risk below like 4,200 starts to fall off. But the short put risk is still very present from like 4,200 up to 4,500. So I
Yeah.
mean, like, because they've been selling those in August and September, right? So incrementally, yeah, their risk to the downside falls off, but I mean, from here to 4,200 is almost 7%, right? It's got to be fucking close.
Yeah, I mean, even the position itself too. I mean, the idea is to just hold it into close, right? Into expiration. But if there is anything that
Yeah.
necessitates the unwinding of at least even just a portion of this, right? It's interesting, yeah, and it does all hinge on this idea that we're like in sort of a lull in the scariness, right?
Yeah. A new normal.
Oh yeah. Well, that's what they're going to push on us in terms of the narrative shift. The new paradigm is already being pushed.
Yeah.
We got what was interesting to me was all the people on they were walking out on Bloomberg talking about how awesome bonds were and how corporate bonds, high yield was yielding so much and that was awesome and they loved it and that made me slightly alarmed.
What's more alarming is that the treasuries are higher than corporate high yield bonds,
Oh yeah, super weird.
right?
Yeah,
It's
I don't
okay, guys.
understand.
Just CNN wants you to, or CNBC wants you to throw all your money into triple B's.
Yeah, exactly.
You'll totally kill it.
Well, yeah, like on corporate high yield, like some of them were talking about like 9% yield on some of the lower end things, and I was like, that yield is really attractive, but the risk there, like you got to think about your counterparty in that regard, and it's they're not going to be super stoked about taking out 9% debt. So your spreads are going to widen quite a bit as if the economy starts to weaken again. So like I find it all super interesting. And yeah, like AAA being below the freaking 2 year is just insane. It's absolutely insane. It's like I mean like I wonder who is out there going, yeah, man, I would love to take a lower yield on something that has risk versus something that doesn't, right?
Well, it's just because
Because
you really believe in the future of Tesla, Apple, Meta, right?
yeah, I
For
guess,
well,
but like,
the next 50 years at a minimum.
what it implies is that there's less risk in AAA corporate than there is in treasuries, which is it's like hard for me to wrap my head around that idea, right?
It's the new normal, man. It's a corporatocracy.
Literally, it's what the market's telling us. It's telling us that your Apple debt that you're buying is less risky than a freaking 2 year treasury.
I mean, Apple has a better balance sheet than the U.S. government. So,
How terrifying is that, Greg? I know now we're talking about like long-term bearish stuff, but how
Yeah,
terrifying is it
it's not
that
going to get
our
better in
treasury?
our lifetimes.
Yeah, the TGA is just like it's just the weakest piece of shit I've ever seen, right?
Yeah,
Like
so let's get into the things you really want to talk about, which is the lack of liquidity, Yellen not being able to fill the TGA with short-term T-bills, and the oil yields dollar spiral. Because I know you don't want to leave here without saying something on those.
oh yeah, for sure. Well, basically dollars are about to flow out of the market. That's putting it succinctly. It's just it looks like from all perspectives, especially with Dixie tanking the way it did, like its interest in dollars is not there, and the big jump in oil prices really does suggest, we were talking about it. I think it was a couple months ago or something, but that a commodity cycle was going to start. I don't know if it'll be a super cycle, but we were kind of in agreement that commodities were going to heat back up at some point, and I think we're kind of reaching that point now.
This is the for anybody who wants to know. This is Bloomberg's broad commodity index future chart. It has broken up a little bit, and is now at resistance at 105. But there's definitely an increase in accumulation here, which is broadly pretty bearish, but also showing a significant increase in interest in commodities. Also, don't forget China's quantitative easing and the fact that a dropping US dollar is quantitatively tightening the BOJ.
Yeah, that whole thing's interesting too, and to boot, right? We have yields across the belly of the curve, just that we had them fall pretty freaking significantly over the past week. So that also tells you, kind of what you need to know about where investors, hearts are at in the market. And I don't think they're necessarily confident in economic growth, right? They're definitely looking towards safety and physical stores of value such as oil. Natural gas has been kind of lagging still, but natural gas just sucks. I hate it. Um, but yeah, there's definitely a shift happening where people are looking for a safe store of value, um, and especially against a weakening dollar, and that is commodities and to some degree treasury.
I agree.
Interesting times, man. We're still like the mile high view is just it's still so crazy, right? We're in this sort of like point of like extreme exuberance, but at the same time you can practically taste the underlying fear.
Yeah.
So I'm excited. I feel like this whole thing, it's just I think everyone's just waiting to unwind what they got, right, and put all their chips on the table. But I think that especially with how bullish things have been, I think that everybody wants to just wait, see how long they can milk this for while repositioning at the same time, and then at some point, I think there is an expectation that this will all kind of unwind, right? And I think the hope is that all the short Vega can just go away, right, like a bad dream. But
But they keep
I
needing to build more, right? So the problem with that is that like the to protect, I mean, like you have diminishing returns at the top, right? And to protect the short Vega positioning, you need to sell more short Vega, right? Which is what they've done, and they just keep compounding the problem. And worse yet, they keep compounding it closer and closer to the money, because if they stayed all at the same level, they wouldn't be able to get sufficient leverage.
yeah, market would stall out. Yeah,
Yeah, so it's like they before they were selling like 4200s for June 21st and 4250s for June 21st, and then they started selling 4300s for August 18 and 4350 and 4400 and 4450, and then they started selling like 4475 for September, right? And like it just keeps getting worse and worse. And they're selling more and more of them too. And you know, the
Yeah,
effect on VIX is now diminished compared to where it was. Like VIX isn't back below 13 again, right? It's been a much longer process for them to drive VIX down. We haven't had those big like 10-15% down days on VIX in some time. But that it's not because they're selling less puts, they're selling even more. The
yeah,
effect is just diminished.
yeah, and it speaks to this idea that this whole pump has just required a continue like it's kind of obvious in some regard, but it just requires this constant flow of money in order to be effective. And I think, like, the moment the money flow sort of starts to slow down, like you were saying, with any sort of, liquidity event, especially on the zero DTE side, the momentum can just, really quickly reverse, or at best, just stall out super duper hard.
What happens if the pumpers survive and we see no correction? I don't think there's that both of those occur. I think you either get one that they don't want, right, and their tail risk gets blown up, or they back out of all of their positioning and then it fails. Because there's no one, like, it'd be a much slower fail, but it'd be a big one, right? Because it would just begin to fail over time. There's no more positive pressure driving things up. You know, they're
Yeah,
responsible for like almost all of the price improvement in the Mag 7 and every major index this year, right? Who, like, we already know no one else is really buying, especially not at these prices. So if there's no buyers, then the market needs to find a level where there are, right? And then supply and demand takes over.
yeah, that's it. It's the thing is like, you know, you wonder, it all makes you wonder sort of where the real buyers are at, right? And it obfuscates them so well when you do these sorts of derivatives based pumps. Um, but yeah, there is two ways this goes out: advantageous for them and disadvantageous for them. And there is a possibility, or I think that the probability is still in their favor of a clean getaway. Uh, but keeping prices at elevated to these levels, especially without actual interest in the market, which we can tell from rising commodities and falling yields that there's not much interest in the equities market. Without interest coming in, the pump is purely sustained by these big short Vega positions, and it becomes less and less tenable, and the incentive to unwind that position gets higher and higher as the returns diminish. So, like, either way, it seems like it necessitates a pullback, whether or not it's an emergency or just the repositioning. It's gonna happen. The real buyers are gonna have to be found at some point. But until FINRA figures out sort of how to deal with this and make sure that tail risk isn't tail risk gets back under control, there's a distinct possibility that this can just keep going on for quite some time.
It's almost like there's a finite amount of money in the market or something. No, that's crazy. JPOW can always make more.
Hedges have infinite money and they can keep suppressing the price of GME forever. Sorry, guys, I had to. I had to say it. I got to tell you the bad news. All right. They can keep suppressing the price of our puts forever as well. Nah.
Yeah. I break stuff all the time. Just imagine Marie Kondo telling you it does not bring you joy. What do you want about Squabs? Mounting horror as the VIX rises like a shambling corpse. Oh, you're writing a screenplay? Good on you, man. All right. So
Yeah,
yeah, I mean, continue to track it day by day. We have a little weakness right now going into this week. Hopefully, we continue to see a decline in ES. I'd very much like to see some effect from SLD. It's been a while. Well, it actually hasn't been that long. It's been a couple months, but a couple months is a long time, and something as constantly repeatable as SLD. So yeah, we'll see what happens. Obviously, this week's going to be kind of interesting. I don't think there's a ton of data. Do we have any like labor data or anything this week coming up? Let me take a quick look here. So I think we have some retail sales, which are going to be great. So
ooh, retail
manufacturing
sales. That's interesting.
indexes. Oh, we got a bunch of housing data this week. Housing data and then Fed reports mostly. So I think we're going to continue to see, and this is a good reason not to try to go long Caterpillar. This week is packed with like all the manufacturing indexes from the Fed banks. So and those are all going to be awful because production and manufacturing still rapidly contracting. And almost becoming deflationary. We're very close, right? According to the last PPI. Like actual deflation on the
Yeah,
producer side.
there's been a little bit back and forth.
I wonder
You know,
historically how many instances of producer deflation while we have persistent core inflation happen.
yeah, and this all comes back to the whole idea of margin preservation. You know, like it's a fight.
We got some jobless claim shit. Yeah, mostly a lot of home sales stuff on Thursday, Wednesday. So probably not too volatile. I mean, this is probably a good opportunity for them to pull back some risk, honestly. So this may be a week where we do see a more consistent decline, maybe something akin to what we saw after that first pump, where we got kind of a week of like sort of grindy downside. Here, back here, where is it? Right here. This kind of shit. We're actually in a very similar part of the month to that, so that's possible.
Yeah, I'm looking forward to it. I mean, any sign of weakness in the market too. I like in terms of
We also have
you know,
the QQQ rebalance,
oh yeah, that's
which
gonna be
is
fun.
ongoing the entirety of this week and finalizes the same day as SLD.
Yeah, I have a feeling this week is probably going to be really boring. If I was, you know, to be realistic, I think it's going to be really boring. A lot of flat because we're just tickling the top of any sort of interest in going long, right?
Yeah, I think we're likely to probably have a pullback into the like 44.75 range. And then just stagnate there unless gamma and delta neutral move up. I really don't think there's a lot of long interest coming in. So I think we'll fall back into the trend. I just don't know if we'll have anything bearish enough to break down. But we'll
Yeah, I
see.
mean, well, it has to be quite bearish too, right? Because there's just so much. There's still so much interest in keeping the market elevated. Like
Well,
you know,
if it's not bearish enough, then we'll just pump again, right?
yeah, we'll get our V and it'll be great. Everyone's gonna have a fun time buying calls at the bottom of the V.
Give her a short list of folks who you think are Smooth's handle. No comment. Inventory sales. All the housing reports I see in local reports in several western states, inventory sales and sold prices were all down. Okay, well that could be bearish. I mean, if we get any like surprise in the housing data, if it's sufficient, it could be pretty bearish. If home prices are down, that's working against the increase in the asset bubble on the equity side. So that might bring some balance. We've still got a little bit of time for the student loans to start back up, right? That's next month. Is it next month or
Yeah,
this month?
I think it's next month. But retail sales, I think, is a little bit of a dark horse. I think that people are paying too much attention to it, but if we get a downside surprise on retail sales, that could be really bearish, right? Because then we're talking about a weakening consumer overall. Even though retail sales have cooled very, very, very significantly, actually getting, not just cooling, but contracting retail sales is a really bad sign for the economy. And I think that could bring in some long-term bearishness.
All right. I did see something about Biden for canceling a bunch more student debt. Kind of, that's been, yeah. I mean, he's got to do something to maintain that platform. So we'll see how effective that is, or if it gets approved or passed through the Supreme Court. But yeah, that can delay everything quite some time. I guess that's about it for today. Thanks for coming on, Dork. I'll see you maybe later tonight or tomorrow or something.
Yeah, for sure. Just got home. It was actually perfect timing. Thanks for having me on, man.
Yeah, no problem. Thank you guys so much for tuning in. I'll have Pickle's Picks out tonight, and then remember to make sure that you turn on notifications for the thread so you can get the updates throughout the week. I'll see you guys all later. Have a good one.